So you likely would have heard a lot about the Bitcoin halving in the media. Now, some people say that it negatively impacts the price, some say that it positively impacts the price, but how about we just have a look at the chart? Hello, and welcome to What is Crypto? I'm Matt, and this is Crypto. Today I'm going to be talking to you about the Bitcoin halving, but more specifically, how it impacts the Bitcoin price and how it will likely impact the price of your altcoins. In this video, I'm going to go through the halvings in 2012, 16, and 2020 and explain what it did to the prices after every 3, 6, 12, and 18 months. I'll go into a little bit about what the halving is, but I will keep the video nice and short. I want to keep you interested, entertained, and I hopefully want to provide you with some pretty valuable content. So if that sounds like it could be for you, then smash that like button, subscribe to the channel, drop a comment down below, and let's get into it. So firstly, the Bitcoin halving. What is it? Well, without beating around the bush, the Bitcoin halving is an event where the rewards for Bitcoin miners are cut in half. It occurs roughly every 4 years, with its initial halving in 2012, the first reward of Bitcoin going from 50 Bitcoins to 25 Bitcoins, in 2016 going from 25 down to 12.5 Bitcoin, and in 2020 going down to 6.25 Bitcoin. We now have a halving which is expected to occur over the next 3 days, and the block reward will be cut down to 3.125 Bitcoin. Now, if you don't really understand anything about Bitcoin is the first widely utilized cryptocurrency. Pretty much, it's now seen largely as a global digital gold. With Bitcoin, you can send money from person A to B. It doesn't matter what country they're in. What's great about Bitcoin is that it has a fixed supply, so no more of it can be printed into existence. It has a set mining schedule, and there'll never be any more than 21 million Bitcoins in existence. Now, that doesn't even count all the Bitcoins that have previously been lost. The benefit of that versus something like gold is when the price of gold goes up, more gold mines open and more gold is released into circulation. When the price of Bitcoin goes up, more Bitcoin miners open, but that doesn't increase the amount of daily Bitcoin produced. That just increases the difficulty for miners to be rewarded in Bitcoin and just helps to further secure the network. You only have to open any newspaper or look at your TV for a short period of time and you'll hear someone mention inflation or devaluation of the dollar. Really, it's a decrease in purchasing power that we are having year on year. And simplified, that's one of the reasons why a loaf of bread today is more expensive than it was a few years ago, and why a house today is more expensive than it was a few years ago. In essence, the money printing that occurs, instead of your assets really being worth that much more, the dollar is worth less. So you have more dollars, but the dollars have less purchasing power. So you're not actually increasing your wealth as much as it might seem. Here's a quick short from Kathy Wood.
There are currency devaluations taking place that people are not talking about. The Nigerian naira is down 50-60% in the last 9 months. Egypt just devalued by 40%. Argentina continuing to devalue. I think this is a flight to safety, believe it or not, taking place. A hedge against devaluation, a hedge against a loss of purchasing power and wealth. Last year in the United States, regional banks imploded. Bitcoin went up 40%. Bitcoin does not have counterparty risk. I think this is an insurance policy against rogue regimes or against just horrible fiscal and monetary policies.
I think one of the reasons that Bitcoin has been so widely adopted and so loved is the fact that you don't have to rely on a middleman. You don't have to rely on any government, bank, or really any third party for you to send money from person A to person B. It doesn't matter if you live in a country and there are trade sanctions on, the money is yours and it's verified on the blockchain and it's yours to do exactly what you want with it. Easily transferred across the world for a cheap fee in a matter of minutes. It's not hugely realistic anymore to be shipping a large amount of gold overseas. However, with a few clicks of a button, you can send Bitcoin into someone else's account on the other side of the world. Anyway, without going too much further down the Bitcoin rabbit hole, Bitcoin is bloody awesome. And I think if you haven't been orange pilled yet, do a deep dive into exactly what Bitcoin is, why Bitcoin is so special, and I think you'll be a convert. So we've talked about Bitcoin rewards being cut in half every 4 years, but why are people rewarded exactly? Well, pretty much that is Bitcoin mining, which is the process by which a bunch of computers or mining software validate transactions on the Bitcoin network. And as a reward for running this software and proving the validations, those miners are then rewarded in Bitcoin. This system is called proof of work, where cryptographic puzzles, in essence, are solved. This takes time and energy, and as a result of this time and energy, which is expensive, the miners are rewarded in the Bitcoin. Now, there are a ton of videos out there on the internet that go more in depth into what Bitcoin is, what mining is, and why Bitcoin's important. But today I just really want to be talking about the halving. So if you can understand that Bitcoin is a proof of work system and miners of Bitcoin or validators of the network are awarded in Bitcoins, and then the Bitcoin supply gets halved every 4 years, you're kind of taking the first steps towards understanding how the Bitcoin halving is going to affect the price of Bitcoin. So in a normal market, if you have a steady or increased demand and a reduced supply, that is going to cause an increase in the price. A quick example would be to imagine that there are 100 people and they all want silver coins, and there are 100 silver coins made every 100 days. So currently there is one silver coin being made every day and one person that needs that silver coin every day. Now imagine you were to cut that supply in half. Now you have 50 silver coins being made for 100 people wanting them. So in essence, you have twice the demand for the amount of supply. People are going to have to start paying more than they originally did if they want to get these silver coins. That is really the case with any resource. When you have a decrease in supply and a steady or increase in demand, it is going to generate an increase in price.
Now, talking about supply and demand, we've already established that we're going to have a decreased supply, with the supply being created by miners being halved over the next couple of days. Now, talking about an increased demand, we have the US ETF, which has been buying thousands of Bitcoin every single day. On a singular day, there was over 14,000 Bitcoin bought by ETFs in America. And on average, it averages between 3,000 to 5,000 Bitcoin per day. Now, in comparison, miners only produce 900 Bitcoin every day. So it's not hard to see how this is going to create a significant supply shock and a supply demand. Now, that is only ETFs in America. There are going to be ETFs in Hong Kong, ETFs all throughout Asia, ETFs in Australia. There are going to be ETFs all throughout the world. And as a result, I believe it's going to drive the price of Bitcoin up. And Bitcoin and crypto is a little bit of a flywheel in the fact that once the price goes up, that's the best advertisement for it. When the price goes up, more people talk about it, which pushes the price further up.
So you likely would have heard a lot about the Bitcoin halving in the media. Now, some people say that it negatively impacts the price. Some people say that it positively impacts the price. But how about we just have a look at the charts and see what it actually does and what it has done over Bitcoin's history. So what I've done to make it more simple is I've charted every 3, 6, 12, and 18 months after the Bitcoin halving to see if we can see any patterns. So in the first halving in 2012, 3 months after the halving, we had a 600% gain. 6 months after the halving, we had a 611% gain. 12 months after the halving, we had a 5,567% gain. And 18 months after the halving, we had a 4,623% gain. Now, it's interesting to note that in this cycle, we did peak at month 10 after the halving. Now, in 2016, 3 months after the halving, we had a 30% gain. 6 months after the halving, we had a 108% gain. 12 months after the halving, we had a 728% gain. And 18 months after the halving, we had a 1,663% gain. Interestingly, that cycle, we peaked at month number 16. Now, going on to the most recent halving, 3 months after, we had a 17.8% gain. 6 months after, 210% gain. 12 months after, we had a 269% gain. And 18 months after, we had a 411% gain. Now, in this cycle, we really peaked at months 10 and also at months 16. Now, I'll pull these up in an Excel document as it will be a bit easier to digest exactly what we've just gone through. So in 2012, you can see the percentage gains per month being 3, 6, 12, and 18 months, 600, 611, 5,567, 4,623, noting that the peak was 10 months after the halving. I've also noted that here the halving was a green month. Now, this is the only time that the halving has actually been a green month. I'll get into what that means in a second. 2016, I won't read through them, but here are the prices, with the peak being 16 months after. And in 2020, here are the price increases. With there being 2 peaks, that was the double top cycle last time, with one peak being at month 10 and one peak being at month 16. Now, interestingly, I'm seeing peak 10, peak 16, peak 10 and 16. So interesting to note that if you're looking at when the peaks are, it's always either been 10 months after or 16 months after. So I think looking at timing your exits between 10 and 16 months is probably not a bad place to start looking.
Now, it is important to note that this cycle is the first time we have hit all-time highs before the halving.
So maybe it's better to start selling a little bit before the 10 to 16 months, but I think that's probably a pretty decent place to start.
Also, if you're not aware of how the Bitcoin price links into altcoin prices, as Bitcoin is the most expensive crypto and has the largest largest market cap, all of the other cryptos follow Bitcoin. So Bitcoin runs first and then all of the other cryptos follow it. Some coins do outperform Bitcoin. But as a general rule of thumb, if Bitcoin goes up 10%, large caps will go up 20 and smaller caps might go up 30. This is in the bull run. And if Bitcoin goes down 10%, larger caps might go down 20% and smaller caps might go down 30. Now, those are just numbers picked out of thin air. But the point is that most altcoins have a high correlation with Bitcoin. And when Bitcoin moves up or Bitcoin moves down, most altcoins will follow Bitcoin.
Now, these green and red months of the halving, what I mean by that is starting from 2012, the month of the halving was a green month. So in essence, what that means is that we finished the month at a higher price than we started the month. In 2016, you can see that it was a red month, with us finishing the month at a lower price than we started. In 2020, we can see it was also a red month, with us finishing lower than we started at the start of the month. You can also always see that there's been at least 2 green months after the red halving month, with the majority of the months over the next year being green. If you look at the 2012 cycle, we had 3 red months over the first year. If you look at the 2016 cycle, including the red halving month, we had 3 red months over the first year, and including the halving month in 2020, we had 5 red months, including the halving month over the first 12 months. So they're just some interesting statistics to look at. I think it's always good to have a look at all of the different metrics, and I'm compiling a list of these different metrics on trying to time when to exit the crypto market. But reassuringly enough, you can note that it is common for us to have a red month, the month of the halving, and then it is common over the next 12 months for us to get a significant amount of price growth. Awesome. Thank you so much, legends, for watching. I really do appreciate it. I appreciate you. Don't forget to like, subscribe, and drop a comment down below. And as always, I'll catch you in the next one.